So this is the weekly time frame. This is on Max. You can see that there's an increasing volume on this weekly candle. When I have a look at the other exchanges, Gates, slightly increasing volume here. KuCoin, that's increasing volume, and that's a significant increase on Bybit. So we have a really strong weekly candle forming here with a buying tail, back testing a key support level on the, you can see here just about that we had a very effective back test on fib time of a 236, and also this GAN. So many things, trend lines, like there's a lot of things that were going on here. So I was having a look at the Elliott wave count yesterday, and I think I might have miscounted, so I redid it. Okay, and sometimes you just have to relook at stuff if you're not 100% sure, to see if your analysis is correct or not. And so my idea was this. I was thinking to myself, and I'm just going to hide these now. At the moment I'm charting on Bybit, so just in case people are curious, I do like to mix them up. I think until we get a chart with significant increase in volume on specifically one exchange, I'll just kind of use all the exchanges. I'm not really prejudiced with the exchanges of which one is better or not. At the moment they're all pretty much the same. I use Bybit, but I use Gate as well. So the question is the Elliott waves. Yeah, there's 5 waves in a bullish impulse, and there's 3 in a corrective. The 5 waves in the bullish impulsive wave are split into 3 bullish impulsive waves and 2 corrective. So each bullish impulsive wave will have 5 waves, and each corrective wave will normally have 3 waves normally. But there's other types of corrections that are possible. And as I've already explained in the past, I was thinking initially maybe this was the first wave, but the idea was not correct, because when we came up here, we came back underneath this pivot. That kind of resets that count if that was in fact some kind of wave 1, just because we came back underneath it. If that was the 2, 3, 3, 4, if that was the 1, then you have your 2, 3, 4, that has to hold. That's kind of how you know. And because it didn't hold, it came underneath, it resets that idea, because then that wasn't valid, that was incorrect. So I've already explained that. The reason why, let me hide that for a second. The reason why this wasn't our wave 1 here, all the way up, is because when you have a 0 and you do your wave 1, then you can't, the 2 cannot come underneath the 0. If the 2 comes underneath the 0, that invalidates the wave 1, and so you have to reset the count again. So that invalidated that as being wave 1, and then this idea of this being some sort of 3 was invalidated because the 4 came underneath the 1. So those 2 ideas were not correct. And so we were still waiting. After this came underneath, I actually explained why that invalidated that idea. And then we were waiting for the first wave 1. We were waiting for wave 1. Now I was thinking to myself, maybe this was wave 1 because this is quite impulsive. Okay, and that's when we were all excited because this is wave 1, and therefore this would have been our 2, and we're in our 3. However, on closer inspection, I was actually looking at where this came to fall into support. You can see it came to here, and therefore I was looking back to see did that correspond with a point, and it did. It corresponds with this one here. Thereabouts. And so something like that. So it doesn't really come underneath it, it's just coming to back test it. It's not 100% precise. Then due to the low liquidity environment, it's possible to slightly overshoot the areas where the price has to hold for a perfect count. So, you know, so in my mind I was thinking, well, maybe that is, and then that got me thinking, well, actually that's actually quite impulsive here as well. If you think about it, it's not impulsive, it's quite impulsive. So on further investigation, was looking at it basically here, and that was quite impulsive. If you see how it began, it's not terribly easy because we're talking about lower time frames. Where did it go again? There. So here, 1. Look at that. It's like a 1 ABC, 2, 3, 4, 5. Yeah, so actually the 5 didn't end. It's actually here. So let me just draw it again. Which one was it? Not that one. So maybe actually it's still there. Maybe it's still there. Let me just zoom in a little bit. It's a bit impulsive there. 1, 2, 3. 1, so that was the 2. 1, 2, 3, 4. 1, 2, 3, 4, 5. Could that 2 be there? Yeah, that's possible too. So that's like a B, C to there, and then you have your 1, 2, 3, 4, 5. That's fine. That's like volume coming in, but actually If you look at the trajectory, that's like one move. So 1 A B C, 1 2 3 4 5 A B C, and then there's like a 5. So actually it would end there. The 5 ends there. That's where the wave ends, not up there, here, because you have a weak 5. And if that was to happen, that would make sense, because this doesn't actually come down to the it's an idea. And then you have this something like that. Then you have to make some kind of sense of this. Let's try. Possible? Well, look, the key is that the 4 doesn't come underneath the 1. So if the 1 came to there, you see the 4 doesn't, so it holds. So you see that's the key. And then these, what is that wave 1? It's like, what the hell is that? It's just like 1 1 1 up. So this is kind of what I'm thinking at the moment, potentially. And then you have this. It's kind of ABC here. And now we're in, potentially, if this is correct, the wave 3. And we're in our wave 1 of 3, 4, 5. Sorry, my bad. Let me figure this out again. No, that's the 1. This is the 2. This is the 3, 4. So this is the 1 of 5. My apologies. How do we know if this is correct? That's the question. I'm just making this up. How do we know? Like, what's the test? Well, as long as the rules are abiding, so as long as this 4 doesn't come underneath the top of the 1, and you have the same idea within these internal bullish waves, the 4 doesn't come underneath the 1, the 4 doesn't come underneath the 1, the 3 is not the shortest, the 3 is not the shortest, the 2 doesn't come underneath the 0, then you're pretty much, it's pretty much correct. It looks correct, potentially, as long as you can see the waves. It's very hard with these kind of small market cap tokens, very illiquid, to see the waves. But would you believe it if I told you they do exist? Okay. So based on that idea, you do fib, trend-based fib, and that helps. So if I do one there to here, no, sorry, not to there, to here. So basically you do it from the 0 to the 1 to the 2, 0 to the 1 to the 2. And then what you see is how the fib extensions on the trend-based fib, how the price reacts to key levels, the key levels, okay? And based on this idea that I have, let me zoom out again because the candles, it might be easier to see the candles. So basically where we're going from this low here to where the 5 ends, not where the top is, to where the 5 ends, because sometimes you can get a M5, and the way to know where the 5 ends is to count the waves. So you can't have, you got to count basically, you got to count the waves, and then you have this ABC, and so that's where it goes. So you're going from the 0 to the 1, that's the 0, that's where the 5 ends, that's the 1, this is where the ABC ends, and that's where the 2 ends, and then you begin your 3. Okay, so you do a trend-based fib from the 0 to the 1 to the 2, and what we can see is as the price goes up, firstly you see this candle, it goes up all the way, and where does it stop? At the 1.618. I think that's quite interesting. Yeah, that's on the trend-based fib. It stops at the 1.618. You have this correction, and then what you can do is the same thing to see if you're correct, to see if you're if it's working. So 1 to the 2, 0 to the 1 to the 2 to the 3. Okay, and how far does it go? Let me just do a few, let me just add these. Yeah, you see how it goes to there? So the 3 goes from the 0 all the way to the 2.414. And when I'm looking at the way the candles are closing on the 4 hour, it looks like it's closing perfectly at the right, at kind of the right fib levels. So the fibs are correct, it looks like it. That's quite expansive. That was quite an expansive 3 to go from 0 to 2.414. That's quite a big move if you think about it. That's 100% move, 111% move. How much was this one? It's only about 39%. So we have this ABC now, and then that would suggest that this is the 5. We're in the 5 now. Okay, so this is the wave 1 of 5 right now. If this is correct, this would be the 1, that would be the 2, that would be the 3, this would be the 4. The reason why this 4 would work is because it doesn't come underneath the top of the 1. So and then we have our 5, and what you're looking for in impulsive waves or impulse. So I think this move here was quite impulsive, and I think this was impulsive, and I think this was quite impulsive, and this is quite impulsive. It's context, obviously. Its context is really important. So I'm just looking at the context of TRVL, and I'm not thinking about other tokens. I'm thinking about TRVL. All right. So based on that idea, there's some other things to consider, and that's the corrections as well, to see how far they corrected. So from here to here, have a look. Now with the corrections, you do it to from bottom to top, not to the waves. It comes to 50%. Does it come all the way down? Not really. What about this one? How far this comes down? Came all the way down to just underneath the 786. Wow, there's the deep corrections. And two quite deep corrections. This one was very deep. So if this is the 1, this is the 2, this is the 3, this is the 4, you can just go from on a trend based okay. So the reason why I think this is working right now is because what you can clearly see in the first level, which is the 618, the price reacts, goes above it, and now it backtests it. You see how there's a reaction, and also you can see in the past it corresponds. So it looks like this. It looks like this trend-based fib is correct. You can almost ignore this one now because it's not really relevant. This is the relevant one now. Or the other way you can do it is do it from the beginning. Yeah, you can do it from the beginning too. Okay. But let's not go there first. Let's just do this one first. Okay. So there's something interesting about what I've discovered in this trend-based fib. And that is that you have a perfect alignment of the 1.618 with the 50% mark on the higher time frame fib. The higher time frame is the overall time frame. What I did is I did a fib retracement from the all-time high at 1.56, not that wick, but the 1.56, to the all-time low, not this wick, to the all-time low, which is at kind of 1.95 cents. Okay, and you have a fib retracement on the log scale, and you can clearly see two things. You can see really nice alignment on the 1.618 with this 50% mark, and you can see really nice alignment with the 2.272 and this 618. And so I am thinking that if and when we break 9 cents or slightly higher at this 382, there's a really strong level at 9 cents, and there's this indicator that I use, which I've talked about it in the past, and it's quite useful. I think if anyone is interested, they could add it. I'll just hide that for a second and I'll show you the indicator. Oh, I've got you here. Okay, so I've done it. I've just redone it again. That's fine. I can just delete that. It's called this one. Okay. Leave Leled-C by In Silico. It's free. You can just get it on the indicators on TradingView. And on the daily time frame, you can see that there's this kind of red line that is developing, and on Bybit it's at 9.5 cents, but actually on KuCoin, where still most of the volume is, it's at 9 cents. Okay, so and these are called exhaustion lines. Okay, so on this chart, the red one is for buying exhaustion and the white ones are for selling exhaustion. And the higher the time frame, the more powerful these levels become. Okay, so on the daily time frame, we came into this exhaustion. It only printed when it hit it for the first time, and it hit it the second it was there, and now we're coming back into it. So eventually it will break, eventually it will flip, just like any other line, but this is an invisible line. It's an invisible line that people can't see, but bots see these lines. Now, I'm not crazy about our current market maker. I don't know what bots they're using. I don't know if their bots are smart, like most bots are. Bots should be quite smart these days because of all the AI stuff going on. But they use these lines, they use these exhaustion lines, and effectively what they're doing, what it's telling you, this indicator, is at that level, the buying is exhausted. There's no more market buying. It's finished. So it hit it once, and then once that line is in, it's your target. And it's not always like, sometimes you lose it and then it flips. It becomes like an SR flip. Becomes like an SR flip until you reclaim it. Then it becomes support again. It's really good on BTC or other like higher market cap coins, but I do see it, and I think it could be relevant, but I think it needs to be flipped. So there's something to bear in mind, that there is a 9 cents mark. We are creating some kind of flat top triangle here, and actually the idea I had separate from this EW count was the idea of a teacup and handle. So I think we're developing a higher time frame teacup and handle pattern here. And if people aren't familiar with teacup and handle patterns, I'm gonna just quickly copy it from the internet. I'm going to put it on and I'm going to show you. Cup, it's called the cup and handle. I call it the teacup because I'm British. The cup and handle pattern. I don't know. Wherever you're from, you can call it whatever you want. Call it toilet bowl and handle. You call it a toilet bowl, it kind of looks like a toilet bowl. Call it whatever you want. So there's some important things about this, and as you can see, according to this information, you have a prior uptrend. Yep, the prior uptrend is intact. Then you have a cup, which is lots of zigzags. You have increasing volume somewhere, maybe here. I don't know exactly where. Then as the price descends, you have decreasing volume. Well, we had decreasing volume here. And as the price ascends, again, you have increasing volume. So volume plays a part in identifying the effectiveness of this pattern. And you have your break line. The break line in this case is 9 cents. So as long as we break 9 cents, the uptrend continues. Look, uptrend continued. So this is a slight correction in the course of our uptrend, but it's not really a correction, it's a slight accumulation or something. So I think we have this kind of cup and handle pattern forming. I don't know if cup and handles have targets like other types of patterns. Let's see, this is an image that might have some more information on the target. Ooh, it's small. Price objective. So how do you work out the price objective? It's the same height as the cup, the the cup to the break line to the neckline. So where is the peak of the cup? Well, it's a very funny cup, right? It's a weird shaped cup. It's not so balanced. Mainly because we had this kind of injection. Is it to here or is it to the middle? It's like a it's kind of like a cup that I would create in pottery class. Because my creative skills are non-existent. It's quite subjective, right? Maybe this was oversold. Don't know. Let's just pretend it's the midpoint for the sake of argument, okay? Which would be somewhere here. And maybe that coincides with where the count begun. So maybe I'm going to take it from where the count begun, as far as I'm concerned. So maybe that's where it begins. So let me just work out the distance. 9 cents, thereabouts, to where it began. Something like that. Is that where it began? Yep. And then we just, for the sake of what I'm doing, it might be easier to draw 9 cents. I probably have it here somewhere. It's one of these. None of these. Must be that. Okay, I'll just redraw it. It's not a problem. Man Cave, he says, glad I didn't close that long. Well, good on you, mate. Well done. So I hope that I helped in helping you decide what to do. Now you can buy yourself a drink. All right, so you have your key level, which is our break level. You can see the prices come into it actually, so it's definitely resisting. God, don't you just hate resistance? And then, so this is the dilemma. Based on the price objective, it could overshoot. And this is why it's important to count the Elliott waves. And I'm going to count the Elliott, this last 5 waves that I'm contemplating, I'm going to count them. Okay, it's only just begun, so I'm not really bothered right now. But as we start getting into the higher prices, I'm gonna count, because I really want to get this right. As far as the cup and handle pattern is concerned, our target is about 23 cents. I'll leave that box for now. I don't need that anymore. And actually, maybe this is not right. Maybe you do it from the break line, the neckline, to the lowest point. If that was true, it'd put us much higher. I'm not trying to make this do what I want. I'm just trying to contemplate ideas. Yeah, so I'm not saying this is correct. It's just an idea, and it does look, it's not like a perfect teacup and handle, so it's a bit lopsided. It does, for me, it looks like a teacup and handle, but maybe it's not. It is possible, and this is the possibility, that this kind of candle up and down wasn't a true move. It wasn't really proper. It was just a mark. Someone just market bought a huge amount of tokens. They didn't care about the price. They just wanted to fill their bags at whatever the price. And it was a deviation from what was actually happening, which is that it was just kind of just going in an uptrend like that. And then someone just market bought, and then people just market sold that, which was good because the people who market sold that helped create higher lows on the uptrend. But maybe there is no cup and handle here. Okay, I'm just like, it might not be correct. So I'm just kind of contemplating what what it could or could not be. It's a bit weird, huh? Just up and down. It's obviously someone market bought, and then you had a large amount of people sell into that. The great thing about the people selling into that was that the price still made higher lows. So that's really powerful indicator of bullishness. So it's just an idea, but all right, let's just forget about that for a second. Let's not worry about that. Let's go back to our Elliott waves. So potentially 1, ABC, which is our 2, then to 3, 1, 2, 3, 4, 5, to 3, ABC, down to the 4, and now we're in our last wave before we see a bit of a correction. Okay, right now I've got the 1.618 corresponding with this 50% mark on the higher time frame, almost to the dollar, or the cent. Almost to the cent. 0.752, 0.745, almost to the cent. So that gives me an idea that this is going to be quite a strong resistance level to the upside. Okay, the other reason why I think possibly this could be a strong resistance level is because of the trapped liquidity in this first rally here, and none of that trapped liquidity has been cleared. When we had this relief rally all the way up to 14, almost 15 cents, it effectively cleared all of the liquidity all the way there. So anyone who was long here was underwater, had a chance to exit at break even. Yeah, that was their exit. But if you were long higher up, you haven't seen the price come back to those prices yet, so you haven't had a chance to exit at break even. So there is trapped liquidity there, and that basically is anything above 15 cents. And really it's just that little bit that comes up, and you see, just I did a little range pull, the point of control comes at the same level. But if you just go to that little bit that comes to the higher, let's see where that comes in. You see, yeah, you see the point of control is at the same level, that same 50% mark at 17.4 cents. You see that? So we have a little bit of confluence here higher up. We have a little bit of trap liquidity. We have a trend-based fib at 1.618, and we got this 50% mark on the higher time frame. So I am thinking there's going to be strong resistance at 17.5. Okay. So this is something to bear in mind. And then the other thing to bear in mind, even though I'm targeting the golden pocket, I think I want to see the waves. So we are in a bullish impulsive wave. There's going to be 5 waves. 1, 2, 3, 4, 5. We've already had our 5. So we've already completed wave 1. Okay, this is wave 1 complete. Now we're going to have an ABC correction, and hopefully it's going to be a flat correction. It's going to be an ABC like that, flat correction. Okay, that would be perfect because you're going from a V-shaped recovery into some kind of correction. Let me just find a V-shaped recovery drawing to see what people suggest it looks like. There aren't really great stuff online. It's just mostly like stocks and forex. Like crypto is slightly different, so yeah, I can't really see crypto. Sometimes with a V-shaped recovery, you have the V shape and then you have a little kind of this, you know, like a little flag at the top. And so the great thing about this V-shaped recovery is that we're basically above that pivot now. The price is above that pivot, and if we have a really nice flat correction here, that's your 1. So from here to here, that will be your 1. Then we have a 2, and I think we want a flat correction. I mean, if we go down, then we're making a inverse head and shoulders. Okay, so it's just as bullish. It's just a different kind of bullish. I personally think flat corrections are more bullish because you have higher targets. So we have to see how this 2 corrects. It's not going to be long. We're not going to be here for a long period of time because you can see the timings are very short. And it's probably going to have something to do with Bitcoin. So if that's our 2, then we have to see how far the 3 goes. Now look, can the 3 take us all the way up to there? That's the question. Yeah, that's the question. We have to see. We have to count the waves, basically. Then we're counting another ABC. Do we get a deep ABC? Maybe all the way back to this 10 cents mark for a wave, for the final wave. Now, just bear in mind the final wave doesn't have to be crazy. It could be it could just be, let's go back to the golden pocket of this downward move. Yeah, so yeah, it could just be back up to the golden pocket. It depends on how the volume. You have to look at the volume, you have to look at the recovery. If you suddenly get another V-shaped recovery, then you are going for higher. Okay, and naturally you can see that our next point of interest is 28-29 cents, and for me that's a really big level. 28-29 cents is a really big level, and that's really my short-term target on this bull market. My short-term target is about that range, and then I'll be looking for a slightly longer correction. Okay, so we have to see if we get up to this level and we pull all the way back to this 10 cents mark, not to 9 cents. I don't want to go, there we go, back to 9 cents. I think if we can hold 10 cents, this 382 would be better. And then what you can do is, let me hide this this trend-based fib. So if hypothetically we go to the 1 here and we have a really flat correction to the 2, So yeah, the 3 could extend to where it's got it there. That's fine. If that's the 2, it's all ifs, lots of ifs. And then you have a 3 to there, and you come back to the 4 to there. Then with an increase in volume, exactly the same thing that's happened here with an increase in volume here. If we get another increase in volume here at 10 cents, and we V-shape, do another V-shape, potentially, then you are looking to get to the golden pocket. You can just pile through those levels, and that will be your strong resistance. You can see there's an extension. On the extension, you're hitting pretty strong areas. And that's if you don't have a mat. A mat would just be just like this, just back up to there. And then you're still in this area here. I think just change the color so it looks different. See, what I'm thinking is that usually when you have Elliott waves, one of the waves is an extended wave, and I'm not sure this wave 1, this wave 3 is an extended wave. I think 1, you're getting slightly more on the 3, yeah. So from here to there, that was only like a 56% or so, 53%. From here to here, you only have about 110%. It's not crazy. But if we go from here to here, that's an extension. Look at that. That's 450%. If it just ends here, that's only 230. It's not crazy. I'm not crazy enthused by that, to be honest with you. So we have to count the waves. I think we're coming to the end of our wave 1 now, and we're in a wave 2 correction. Yeah, and we just have to see what the next wave is going to be. The wave 3, as far as I'm thinking, has to get to the 17.5 mark for many reasons. Firstly, the wave 3 has to be longer than the wave 1 for the wave 5 to be bigger. The wave 3 can't be the shortest. So if you have a really short wave 3, then the 5 can't be longer. It'll have to be much shorter. You'll end up like that. So really, I'm thinking we go up to 17 cents, 17.5. Potentially we come back down to 10. And then we just power through to the golden pocket. That's kind of what I'm imagining right now. It's kind of, I'm contemplating this idea. And then when I pull up my Wyckoff graph, oh, I haven't got it here. It's on MEX. I'll go back on MEX then. So I've got this Wyckoff accumulation. You can see it here on the left. So I have two things going on here. There's a few things going on. You have the idea of some kind of Adam and Eve, which I've explained. It's kind of like this. And that's not invalidated. We're still in that kind of pattern. For that to happen, you really do need a strong break of the neckline. I think if we just go up here and come back down without breaking, a proper break, it's not gonna be strong enough. You just have to break the neckline with strength, yeah? And that's what you want to see. You want to see strength. But if you also look at this Wyckoff schematic, the LPS, which is the lowest point of support, let me put this on the weekly time frame. Let me see if you can see the candles a little bit better. I'll get rid of that now. So you see this LPS that I've got marked. As far as I'm concerned, it corresponds with the first higher time frame fib level of 236, and we've back tested that now. So effectively we've done this. We've gone up from our spring, our test, and now we've gone up like this, and we've come back into the LPS and we've back tested it, and we're on our way. And this is the sign of strength. This wave now that we're experiencing is the sign of strength, is the sign of strength wave on this Wyckoff schematic. And really, for a sign of strength, we need to get back above the AR. Now, here it's a little bit messy because you have these wicks. I have the AR at about 2.21, 22 cents, thereabouts, okay, which is basically this 50% mark. So I do think that with this final wave, which we're in now, and that would complete the wave one, we have to get to the golden pocket. And that would be a real sign of strength. And the way to get there is to do what I suggested. Break 9 cents, go up to 17.5, which will also coincidentally on the weekly time frame is a higher high. You see, that's the pivot. This is the lower low here, the all-time low. That's the lower high on the weekly time frame. And if we are able to get up to 17.5 cents, we've just put in a higher high on the weekly time frame. So we're beginning market structure change by making a higher high. And then if we are able to, if it does go back to 10 and we hold, and then we have an injection, another injection of volume and power through all the way there, that for me would be the sign of strength. That would be a sign of strength, getting all the way into the golden pocket. And it would also signify, yeah. And then the back test will be the next correction. The next correction will be this kind of a prolonged correction. And maybe we'll come back and test the neckline of this Adam and Eve pattern, and that will be about 12, 13, 14 cents. It's a kind of a rough area. That's for this Adam and Eve pattern to be valid. Otherwise, it doesn't really matter because you're in this Wyckoff accumulation. I don't think once you're in this Wyckoff accumulation schematic, I don't think then you want to see the buy up line that I have and the LPS, which is the last point of support. That's basically, I think it's probably 10 cents. It's probably this 382. Maybe 9 cents, because my 9 cents is the historic figure of the token launch price. But in a correction, if you do go up to the golden pocket and then you have some kind of ABC, I don't think I want to see the price now come lower, much lower than the 382. And that's going to be like a prolonged ABC, potentially. It depends on Bitcoin. And the flat corrections I think are more bullish because you just have higher targets, but deep corrections can be bullish because what you're doing, what's happening is people are taking profit at the golden pocket and they're waiting for the correction and then they're putting the value back in. And so that's when you get these volume increases at support levels for continuation. Okay, and that's what I'm contemplating right now. We have to count the waves and we have to see how this pans out. But the next, obviously the first challenge for the bulls is to break 9 cents and get to 17.5, and that will be a higher high on the weekly time frame. So this is something that I've been thinking about a lot, and so I've just updated the count for you guys, and let's just see if I'm right and if anyone else has any ideas. See, we're having a little bit of a pullback here, so let's hope we have a flat correction here. We'll have to keep an eye on it. I mean, look at that V shape. It's nice. It's really nice. So this is my kind of current EW count right now. Back into 9 cents again. See that? But if we can just hold here and just consolidate here, we're just consolidating on the resistance. Could this wave 5 be a meh wave? With all of this volume that's come in, back testing a higher time frame support, bullish impulse, this is not a meh wave 5. This is going to be a strong wave 5. Yeah, it's not a meh volume. This is like strong impulsive volume. But the thing that you have to consider is that a lot of people are now entering TRVL, and so I don't know if people are aware, but there was a really large an influencer with a large following. I've never heard of him, but he tweeted, and there's two things that have been tweeted. This Lunar Crush, so they have, look, they have 301,000 followers, yeah, and look what they did. New AOE coins added to lunarcrush.com/discover, and hey, look, TRVL, okay, and that got 15,000 views. Okay, so it's amazing. The timing is amazing, huh? So I've retweeted that. You can have a look at that. Obviously, you get like these because the volume has increased. Crypto girls. Oh no, not crypto girls. Who was it? Was it Habib? Some Habib guy. Where is it? Because I retweet a lot. Bitcoin. Here, look, Bitcoin Habib. He has 125,000 followers. You see that? And look, read this. March the 22nd. TRVL is an undervalued RWA gem that is sitting at a perfect entry for a mid to long term hold. TRVL is changing the travel industry as RWA project with deep in models. My personal target is 500% from here, and I expect to hit it within the next few weeks or months, especially with the trend being RWA, and this is a great RWA project with good utility and good infrastructure. Well, I can correct him. It's great utility, future great utility, and amazing infrastructure. That's my first correction. Secondly, this is potentially a lifelong hold. Not mid to long term, lifelong hold. I'm not fond of his analysis. It makes no sense to me whatsoever. I don't know how people can analyze the charts like this. I still retweeted it. It's no big deal. For the reasons that I've said, I'm not aiming for this 39 cents. Yeah, I've got my own reasons why certain levels are going to potentially react before we get to 39 cents. I don't know how he came up with 39 cents personally, but that's fine. You know, like let the masses think it's going to 39 cents. But that really brings me to my critical observation. We have a lot of people entering TRVL right now, and these people are not like us. Potentially, they're not looking for long-term hodling or maybe lifelong hodling. They're looking for quick gains. Yeah, they're looking to flip 2x 3x quickly and then just get out and pull their money to another project. So there's a capital rotation going. There's no reason to think that a lot of these people aren't going to sell. And when they do sell, if you don't have bullish continuation or bullish momentum, then the price pulls back deeply or sharply. Yeah, so the onus is on us to beat them to the chase, and then the onus is on us to hold the support levels. Okay, we are the ones here who care about this project and are long-term hodlers and are long-term believers in what TRVL and Dtravel is and are doing. And therefore, I've given you all the levels of interest. Okay, I've given you reasons why, and I'm going to be tracking this movement very carefully because I think this is the final wave of this wave one. So it's really important that we try and get this one right. Yeah, this is the one that I've been waiting for. Okay, and therefore the onus is on us to do it right and make an effort to defend the correct positions, and then into resistance we can maybe take a little bit of profit so that we have dry powder. Okay, so this is kind of what I'm imagining, and I think if anyone is interested to participate in our combined joint endeavor, and let them think it's going to 39 cents, they're just going to buy it more vigorously, but we know roughly where the confluence levels are, the areas of interest, and therefore we can act correctly. Okay, we haven't actually hit this 10.4 mark on Bybit this time round, but if you look at MEX, for example, we have hit it once there. You see it reacted. Did it react on yeah, you see on Gate it reacted, and then here I don't have my fibs on KuCoin. That's not correct. One of these? Nope. It's all the same. Okay, let me just pull that up to 1.56. So it's kind of like front run. It almost got there. So we just need to power through that level, to be honest with you. I'm not really. Let's see what happens. Any questions? Oh, the man cave. Yes, thank you. Okay, I'm happy for you, but it's pulled back a little bit. So, or is that Bitcoin?